Bismillah ar-Rahman ar-Rahim. Talking about what the future of Islamic finance looks like and what should be our key priorities. And in this segment, I would like to touch upon the context of this play. Why is it, why do we need to take Islamic finance mainstream across different markets? And I will share some facts with you, in terms of what's happening in the world. Number one, from a business perspective, right? I mean, students of Islamic finance should think about A, financial inclusion, B, sustainable economic growth in the economies that Islamic finance is operating, and C, jobs and entrepreneurship, because emerging markets, including Pakistan, in the foreseeable future, employment opportunities will not be enough to cater to the massive youth population that we've got out there. So both jobs, but also entrepreneurship is important. From a financial inclusion perspective, if you think about it, 2.5 billion people globally today do not have bank accounts. Today, in fact, more people have smartphones and mobile phones than bank accounts. So our finance proposition of the future need to think about how do we reach out to this 2.5 billion bankable population which do not have accounts today. And let's contextualize it to our markets. So in Indonesia, 64% of the population today is without a bank account. In Egypt, 84% of the population. And in Pakistan, 87% of the population is today without a bank account. Does Islamic finance has a proposition for this segment? Again, a question I will leave for Gen Z. Second, sustainable economic growth. What is the contribution of Islamic finance going to be? A shocking fact I'll share with you, 40% of the population across OIC markets live below poverty line, right? How can Islamic finance help them come out of poverty, right? Through, again, providing access to finance. And in this respect, if you look at the responsible social investments, that is growing fast. And at the same time, it is able to generate good returns for shareholders. And the concept of social capital is going to become more and more important, right? How do you combine philanthropy, for which Pakistan is really known for, be it sadaqah or zakah, etc. How do you combine that with market capital to actually provide people access out of poverty? And an example I will give with you is, in across the world, our estimates suggest there is about $38 to $40 billion annually that's given out in zakah money, right? And an equivalent amount is given out as other charities, right? From within the OIC markets. Now the question is, if there's about $80 to $100 billion being donated annually, why is it not making that desired impact in terms of helping communities and people come out of poverty? And the reason for that is the concept of zakah and endowments has still not been studied enough. And now there are a number of working models out there, and we really need to revive these concepts if we've got to use this money more smartly. And the third is in terms of jobs and entrepreneurship. There's 1 billion youths across OIC markets at the moment, right? And there are 200 million micro, small, and medium-sized businesses that do not have access to finance. So what is Islamic finance proposition to these youths and to these micro, small, and medium-sized businesses? This is the context that we have to keep in mind when we are talking about the future progress of the industry. Now that's one. The second point that I will mention in terms of setting the context is Gen Z has to think about how to complete the financial circle. Right? What does that mean? There are about 8 to 10 segments in the financial within the financial services industry that need to be completed if we are to have a holistic Islamic finance proposition. Banking or retail and commercial banking is something that has been that's been a flag bearer. We've done quite well in a number of markets. In 4 markets at least, we've got a 30% plus market share of the banking system assets. The remaining 5 of the core markets are doing well, anywhere between 5 and 20%. So that's doing well, and it will keep progressing. So I will label that green, right? But then we look at some other segments. So, for example, takaful, which is still an evolving sector. And I talk about capital markets, where we've got sukuks, but a number of other asset classes like pensions, right, like retirement planning, like social capital is still underdeveloped. And even sukuk industry is not fully mature at the moment. So I will label those as amber, both takaful and capital markets. And then the remaining 5 or 6 segments, they are a big red, which means that, work is still in infancy and a lot more needs to be done. What does that mean? That includes trade finance, for example. New trade routes are being developed. The South-South and Southeast, and in Pakistan's context, CPEC, of course, is going to completely change, for example, how China is going to deal with the rest of the world for the next 2 centuries, right? And within trade finance proposition, how does fintech play a role? The student of Islamic finance need to understand both the products, from a Sharia and products angle, but also the new technology which is coming out in the market in the trade finance space, right? So that is one. Second is infrastructure development. Are our Islamic banks and Islamic financial institutions and Islamic funds big enough to actually cater to the infrastructure development requirement across the economies that we operate? And the answer is we've got a very small part of it, and there's a lot more specialization that needs to be done within, for example, energy sector, transportation, within energy, renewable energy, right, where students of Islamic finance need to look into and build their specialization. Similarly, the Awqaf segment, or the endowments, the entire US education system today is built on the basis of endowments, right? Where you mobilize capital, which is then invested in certain asset classes in a way that principal is protected, and the returns are actually invested for certain causes. As a result, the likes of Harvard and Stanford are able to subsidize a huge part of their R&D work because of the endowment income that they're getting. And if you look at the Awqaf industry, Ernst Young's estimates suggest that we've got about $100 billion plus in terms of cash, waqf sitting out there. We also have an equal number or bigger amount in real estate Awqaf, which is again not being optimally leveraged, and that's an area that really needs to be studied further if we are to really bring resilience in the financial system, b make sure that the concept of social capital takes off in OIC markets. Similarly, pensions is another segment, retirement planning. So we want to keep our deposits in Islamic banks. We want to invest through Islamic financial institutions, but is our gratuities, is our pension, is our retirement income coming from Sharia compliant means? And the answer is not yet. And I must mention in Malaysia, EPF, which is the state pension fund, $160 billion plus value, in the last 2 years, initiated a project to say how can we carve out this a Sharia compliant part of this fund, which allows people the option to actually invest in Sharia compliant pension and retirement saving plan as well. And that again will be a huge segment that in turn will also give impetus to our asset management industry. Another segment which needs to be which is a big red, is wealth management. And right now, to date, both conventional and Islamic finance system is catering only to high net worth individuals, people who can afford, let's say, I don't know, $1 million or more, or $1 million or more. How do we bring that wealth management option to our retail customers? And again, the advent of fintech is opening up new opportunities, new avenues, the likes of Beehive, for example, who have the Sharia compliant options for retail investors who've got 100 dirhams or more, to be investing in SMEs, and the returns there on Sharia compliant debt instruments is anywhere between 8 to 12%. So complete disintermediation there and bringing wealth management down to the retail segment. And finally, small finance and small savings are going to be an absolute critical path. So looking at the housewives, looking at the youths, looking at the blue collar, looking at the lower income class, looking at the middle income class, and saying, how can we help them save for a better future? Practical examples, right? Higher education. A research shared in the World Islamic Finance Forum suggests that only 4 out of 100 school students actually end up going into universities. And most of them, the reason for not going to universities is financial. Through takaful means, with a saving of about 1,750 rupees a month, over a 20-year period, if the youths have the saving habit, then they will be able to save enough to actually afford their kids university education. So again, we've got to start seeing the role of Islamic finance in the context of real economy. And this is what I call linking Islamic finance with the real economy overall and completing the financial circle. So students of finance, Islamic finance, Gen Z, the need of the hour is how do we look beyond retail and commercial banking and make sure that the remaining amber and red circles are actually complete. Very important going forward in terms of mainstreaming Islamic finance is going to be the role of fintech or financial technology in the progress of Islamic finance. Look at it in the broader context. Islamic finance, by definition, was a disruptive force when we came into being, right? We were supposed to disrupt conventional banking. And to a great extent, that has been achieved. Going forward, fintech is bound to disrupt the way financial systems work. And if Islamic banks are to progress, it is absolutely critical that we embrace the fintech model that is out there. What does that mean? We need to understand which are the 2 or 3 or 4 areas which are ripe for disruption. And here I will share 3 areas. And this is all relevant for our Sharia scholars, the students of Sharia, as well as banking and finance students, as well as professionals who are product specialists or who intend to create a career in Islamic finance. The challenge, why is it important to understand this? Because right now our colleges are producing a great amount of very qualified individuals who are very passionate about Islamic finance, but unfortunately, all they understand is what murabaha and mudaraba is. And what I would submit is this was good enough for my generation, where we had enough understanding of a little bit of understanding of Sharia concepts and banking, and we were able to merge the two. But tomorrow's bankers of tomorrow, be it the Sharia scholars or the product guys or the IT guys, they need to understand the new technology and the new sciences which are coming into play, right? I will touch on 3 areas which are ripe for disruption, and my submission will be explore more. 1, wealth management. 2, payment solution, and 3rd is the lending and the financing aspect. Wealth management side, if you look at, in the previous days, the UBS and the Credit Suisse of the world and and even in Pakistan, the larger banks were keen to serve segments who've got a certain minimum ticket size. So they've got $1 million plus, for example, or $1 million plus. And there a lot of personalized advice was given, right? And again, likes of you and me never had access to wealth management solution. This has completely changed after fintech. And I would encourage you to look at the likes of Nutmeg, for example, or Wealthfront, or Betterment, and how they're completely changing or disrupting the world of wealth management business. And for example, Nutmeg, right? Their entire disruption was based on 2 key criteria. 1, they said, we are going to make customer experience a lot easier, right? No walking into a bank, no being, internally insecure about, am I going to get the right respect because I only have a $500,000 rupee, and will I get the right level of attention or so forth? So, gone are the days. What they did was they said, okay, you come on our portal, and the first thing you do is you tell us about yourself, and automatically through the use of robo-advisors, we are going to, or robotics at the back end, we are going to create a portfolio for you. And if you happen to like it, and if this is something to your liking, then you can progress and we can do the rest of the formalities. So they completely changed the customer experience angle of what wealth management business is going to look like. Second, they built algorithms and sophisticated models at the back end, which of course had some human intervention, but it brought down the cost and the speed, and the quality of service was improved big time, right? And the portfolio allocation was done based on your risk appetite, as you've selected. Changing these two aspects, they've brought down that wealth management proposition to a retail investor who's got $100 with him, for example. So, as students of Islamic finance, you need to understand what the wealth management proposition of tomorrow is going to look like, what is robo-advisors, how these mathematical models are built, right? Similarly, on the payment solution side, a lot is happening. MasterCard, Visa are setting up their innovation centers that are talking about, okay, what is the world going to look like beyond cards, right? So in the UK, for example, there's an experiment going on, for example, in terms of donation, with the card, for example, donate as you go. There are tins, on the road, to the charity of your liking. All you have to do is just tap the card on that tin. It'll deduct £1, for example, right? Similarly, within payment solution, mobile wallets you're seeing, right? TransferWise, that has brought down the cost of remittance by 80%. Now think about it. If we were to be unnecessarily critical, and if someone was to say, you know what, I'm going to completely revamp the world of remittance, then you'll be like, are you kidding me? Banks are already doing so. What is the proposition? But when you get down to the details, and when you say, you know what, there's tremendous amount of data available, and there are pools of different currencies I can create, such that I don't have to go through banks, and such that I won't be charging all these unnecessary fees, because I'll be able to automate a lot of these processes and net off a lot of these remittances, and such that a huge amount will never have to leave the land where it is being remitted from. And today, TransferWise has built up a few billion pounds of a portfolio. They've brought down the cost of remittance by 80%. They've completely disrupted, and that's just one example, right? And they've completely disrupted the remittance market. Similarly, mobile money and so forth. So look into how Islamic finance products, right, can be merged with the new payment solutions which are coming out. The third key area ripe for disruption in fintech is that of financing. And what does that mean? I'll give you the example of Beehive. Today, the banks are intermediating by mobilizing deposits on one side and then financing assets on the other side. And the cost of intermediation, because banks are regulated, is significant, right? As depositors are getting, peanuts in terms of returns, right? Islamic finance proposition should be, how can I change this? How can I ensure, by being the best bank in town, by using the best technology in town, how can I ensure that a lot of these economic benefits are actually passed on to the end depositor or investor? In fact, depositor may be the wrong term, to the retail investor. And what is happening is right now, Beehive, again through or Lending Club in the conventional space, what they've done is through platform technology, and again, note this word, platform technology, right? Through platform technology, they've been able to disintermediate a lot of this banking business, one. Second is, they've been able to leverage this peer-to-peer financing concept and crowdfunding concept to actually link SMEs to retail investors. And as a result, today they are giving returns which are way in excess of whatever you will get by putting or investing your money through banks, be it Islamic or conventional. They're giving returns of 8 to 12%. In Pakistan's environment, where you've got a certain inflation rate and you've got a return on your deposits a lot lesser, students of Islamic finance should look into how can we provide real rate of return to our common man out there, or common women out there, right? And the likes of platform technology, how can we bring in to disintermediate? So these are just some examples in terms of how banking is going to change in future. And students of Sharia, students of Islamic finance products, students of technology with a passion for Islamic finance should understand, what is this blockchain? What is R3? What is Spotfire? What is Hyperion? What are these tools? And again, ensure that there's a fusion of expertise, Islamic finance versus these new sciences, right? Tomorrow's Islamic financial institutions will all be about two things only. A, they will be about data, and B, they will be about customer experience. That will be at the heart of banking. Banking will become incredibly simpler, incredibly affordable, and incredibly accessible. Students of Islamic finance need to understand, are we just going to be followers, or do you have that passion? And the likes of Coursera.org or edx.org provide these courses, actually, that allow you to access top quality curricula from the likes of Harvard and MIT and Stanford, at your doorstep. So taking Islamic finance mainstream will require fusion of Islamic finance and these new sciences.